Hello friends, welcome back to a new video. In this video, we will learn another important concept which your Macmillan haven't done justice, that is NPA and NPA provisioning. Friends, please note that this topic is very important for both JAIIB and CAIIB. In JAIIB, this topic is vastly covered in Module B of Principles and Practices of Banking, and in CAIIB, this topic is covered in Module D of Bank Financial Management. And most often case studies are asked from this part. So you can see what's the importance of this topic. So if you are preparing for JAIIB, then better prepare this by understanding the concepts so that you won't face problem even in CAIIB. Thus, as you saw, this topic is very important if you are both JAIIB and CAIIB candidate. But CAIIB candidates, be prepared to face conceptual case studies. So better watch this lecture till last. Friends, this is one topic in which students are most confused. And every year many questions are asked from this part. So I will try to present this topic in very simple and lucid way, so that by the time you finish this video, you can solve the questions on provisioning with ease. First I will explain the NPA and provisioning concept, and then we will solve two case studies that will make this concept crystal clear. So let's start. Friends, advances are major portion of any bank's portfolio. But over the time, some advances do turn out to be bad. So the banks have to classify their advances into two broad groups. The first is performing assets and second is non-performing assets. Performing assets are also called standard assets. And the non-performing assets is again classified into three groups, and they are: first is substandard assets, second is doubtful assets, and third one is loss assets. Let us understand each of these in detail. First is standard assets. Now, standard assets are those which do not disclose any problems and which does not carry more than normal risk attached to the business. Then comes non-performing assets, which is one of the topic of discussion of this video lecture. Friends, non-performing assets gives double blow to the banks. On one hand, bank earns no interest on these advances, and on the other hand, banks need to do provisioning for such assets. Now, according to Master Circular of RBI, an asset, including a leased asset, becomes non-performing when it ceases to generate income for the bank. Thus, a non-performing asset is a loan or an advance where first, interest or installment of principal remains overdue for a period of more than 90 days in respect of a term loan. Second, the account remains out of order in respect of an overdraft or cash credit. Friends, an account is said to be out of order if the outstanding balance remains continuously in excess of the sanctioned borrowing power, or where the outstanding balance is less than the sanctioned borrowing limits. There have been no credits in the account for a continuous period of 90 days prior to the balance sheet date, or where the credits are not enough to cover the interest debited during the same period. Now, in case of bills, the bill remains overdue for a period of more than 90 days in case the bill was purchased or discounted. Fourth, the installment of principal or interest thereon has remained overdue for 2 seasons for short duration crops. Now friends, this is very important for bankers working in rural branches. Fifth, the installment of principal or interest thereon has remained overdue for 1 season for long duration crops. This is also very important for bankers working in rural branches. Sixth, the amount of liquidity facility remains outstanding for more than 90 days in respect of securitization transaction. Now friends, as per RBI, banks should make necessary provision for non-performing assets after classifying them as substandard, doubtful or loss assets. Now let us see each of these in detail. Let us first see what a substandard asset is. Now, a substandard asset is one which has been classified as NPA for a period not exceeding 12 months. In case of a substandard asset, the current net worth of the borrower or guarantor or the current market value of security charged is not enough to ensure recovery of the dues of the bank. Now comes the doubtful assets. Now an asset would be classified as doubtful if it has remained in the substandard category for a period of at least 12 months. Please note that a loan classified as doubtful has all the weaknesses inherent in assets that were classified as substandard, and also with some other added characteristics. As per RBI guideline, loan upon becoming an NPA would first be classified as substandard for a period of not exceeding 12 months, and beyond that it would have to be classified as doubtful. Lastly, we have come to loss assets. Now, as the name suggests, a loss asset is one where loss has been identified by the bank or internal or external auditors or the RBI inspectors, but the amount has not been written off wholly or partially. In other words, such an asset is considered uncollectible, or if collected, the collection value is very low value that it hardly becomes a productive asset for the banks. Friends, please note that this classification as substandard, doubtful and loss assets is meant for the purpose of computing the amount of provision to be made in respect of advances, and not for the purpose of presentation of advances in the balance sheet. Finally, we have come to most important part of this lecture. Friends, because of the time lag between an asset becoming substandard or doubtful turning into loss asset, RBI has in fact directed that banks should make provision against all assets, that is loans and advances, as follows. This table shows the rates of provisioning for substandard, doubtful and loss advances. Friends, please note down this table, and this table is the only thing which you need to learn to solve any provisioning question. Also, do remember this table for your exam. So as per RBI, the rates of provisioning are: now for standard advances, first, direct advances to agricultural and SME, the rate of provisioning is 0.25%. Now friends, mostly you will encounter this only, and if nothing is said in the question, you should use this rate only. Second, for advances to commercial real estate sector, the rate of provisioning is 1%. And lastly, all other loans and advances not included in A and B, the rate of provisioning is 0.40%. Now let's come to substandard assets. In case of substandard advances, for secured exposures, that is for secured advances where security is there, the rate of provisioning is 15%, while for unsecured exposures, the rate of provisioning is 25%. Now, in case of unsecured exposure in respect of infrastructure loans account where certain safeguards such as escrow accounts are available, the rate of provisioning in this case is 20%. Let's now see doubtful advances. In case of unsecured portion of doubtful advances, the rate of provisioning is 100%. While in case of doubtful advances where security is there, for doubtful up to 1 year, the rate of provisioning is 25%. For doubtful greater than 1 year and up to 3 years, the rate of provisioning is 40%. While for doubtful greater than 3 years, the rate of provisioning is 100%. Lastly, for loss advances, the rate of provisioning is 100%. Hope this table is clear to you. Please remember this table. Also note down somewhere so that you won't feel problem while solving case studies later in this lecture. Another important concept is that of provisioning coverage ratio, which is basically ratio of provisioning to gross non-performing assets. This is generally asked in case studies related to provisioning. Friends, this is all about concept of NPA and provisioning. Now let's start with our case studies. So first case study is, from the following information of ABC Limited, compute the provisions to be made in the profit and loss account. And the information given is this, that is amount of standard assets are 20,000 lakhs and amount of substandard assets which are secured is 16,000 lakhs. Now doubtful advances for 1 year is 6,000 which are secured. Doubtful advances for 2 to 3 years which are also secured, and the amount is 4,000 lakhs. Now for more than 3 years, and these are secured by mortgage of plant and machinery of rupees 600 lakhs and the amount is 2,000 lakhs, and amount of loss assets are 1,500 lakhs. Friends, my advice is to please note down this question so that you will feel comfortable when we solve this question. Now to find total provisioning, we have to individually calculate the provisioning for standard, substandard and doubtful assets as per the rates we learned in previous table. So for standard assets and the amount is 20,000 lakhs, we learned that the rate of provisioning is 0.40% in case of secured. So 0.40% of 20,000 is 80 lakhs. Now let's calculate provisioning for substandard assets which are also secured and the amount is 16,000 lakhs. We learned that the rate of provisioning in this case is 15%. So 15% of 16,000 is 2,400 lakhs. Now for doubtful assets for 1 year which are secured and the amount is 6,000 lakhs, we learned that the rate of provisioning in this case is 25%. So 25% of 6,000 is 1,500 lakhs. Now for doubtful assets for 2 to 3 years period is, and the amount of advances were 4,000. We learned that the rate of provisioning for doubtful assets for 2 to 3 year period is 40%. So 40% of 4,000 is 1,600 lakhs. Now for doubtful assets for more than 3 years and that too unsecured. Now friends, for more than 3 years only 600 lakhs is secured and rest 1,400 lakhs is not secured. Thus for this 1,400 lakhs the rate of provisioning will be 100% as we learned earlier. So for unsecured 1,400 lakhs the rate of provisioning will be 100%. So amount will be 1,400 lakhs. Now for remaining 600 which are secured, the rate of provisioning for these also will be 100% as we learned in the table. So total provisioning for this amount will be 600 lakhs. And for loss assets, the amount is 1,500 lakhs. We learned earlier that the rate of provisioning for loss assets is 100%. So provisioning amount will be 1,500 lakhs. Now friends, we have to calculate total provisioning in this question, in this case study. So total provisioning will be sum of all these individual provisioning amounts, which comes out to be 9,080 lakhs. Friends, hope this case study is clear to you. Feel free to ask any question in case you fail to understand any point. Let's move on to second case study. From the following information, compute the amount of provisions to be made in profit and loss account of Hyderabad Bank. Now standard assets having value of security for only 6,000 lakhs and the amount of standard assets are 7,000 lakhs. Now substandard assets which are secured and the amount is 3,000 lakhs. In case of doubtful assets, doubtful for less than 1 year, realizable value of security given is 500 lakhs and total amount is 1,000 lakhs. In case of doubtful for more than 1 year but less than 3 years, realizable value of security given is 300 lakhs and total amount is 500 lakhs. Lastly, doubtful for more than 3 years and in this case no security is there and total amount is 300 lakhs. Now friends, let's calculate the provisions on various performing and non-performing assets. Hope you remember the table which we learned earlier in this lecture. So let's solve this case study. Now standard assets are 7,000 lakhs and we learned that rate of provisioning for standard assets is 0.40%. So 0.40% of 7,000 is 28 lakhs. Now for substandard assets and that too secured, amount is 3,000 lakhs and we know that rate of provisioning is 15%. So 15% of 3,000 gives 450 lakhs. Then for doubtful advances and that too for less than 1 year, now we have to divide this total 1,000 into two parts. First on secured portion, as given in question, realizable value of security is rupees 500 lakhs. Thus provisioning on this amount will be at the rate of 25%. So 25% of 500 gives 125 lakhs. Now on unsecured portion, remaining amount will be 1,000 minus 500 and provisioning for unsecured as we learned is 100%. So 100% of 500 is 500 lakhs. Thus provisioning on unsecured portion will be 500 lakhs. Then for doubtful advances, more than 1 year but less than 3 years. In this case also, this whole amount of 500 lakhs will be divided into two parts. First is secured and second is unsecured. Now for secured portion, that is 300 lakhs, rate of provisioning applied will be 40%. So 40% of 300 gives 120 lakhs, and on remaining 200 lakhs unsecured portion, the rate of provisioning will be 100%. Thus 100% of 200 will be 200 lakhs. Now for unsecured doubtful assets of more than 3 years, provisioning is done at the rate of 100%. So 100% of 300 will be 300 lakhs. Finally, total provisioning will be sum of all these individual provisioning amounts, which comes out to be 1723 lakhs. Friends, note that this case study is not simply to calculate total provisioning. In fact, IABF in exam can ask this case study and present you with 5-6 objective questions. Example, IABF people can ask total provisioning, which you already saw in both these case studies. Then IABF can also ask about which rate to use for such and such asset class. They can also ask provisioning for any particular asset class, say for substandard asset only. Also they can ask PCR, that is provisioning coverage ratio, which is very simple if you know the concept. Like this, many questions can be framed out of this case study. Thus, study both these case studies with broad mind and not just stick to calculating total provisioning. Finally friends, I will wind up this video and hope both the case studies are clear to you. Also friends, I have received many queries regarding updated books which students should refer. I have recently made updated video, the link for which is at the last of this video and also in description. Also don't forget to subscribe this valuable channel where I believe in only providing quality content without wasting much of your time. Friends, you can post in the comments what topics you are facing difficult so that I will present those topics and concepts in simple manner to you. The topics in bank financial management which I am currently covering are topics which most students are confused but not well covered in your textbooks. So thank you and all the best for your preparations.